Last week, Fitch affirmed the UK's AAA rating, but with weaker than expected growth and fiscal outturns in 2012, pressure has increased on the country's top grade, which has been on negative outlook since March. To discuss this with me further, I'm joined down the line by Charles Purdy, Director at Smart Currency Exchange in London. Mr. Purdy, thank you for joining me. The budget deficit for this year is looking to be in excess of 8%. How has the UK come to be in this position?
Well, I think there's been two or three problems. Obviously, expectation with the last government was centred on continuing growth, and they allowed the government expenditure to grow to be 50% of GDP, which is obviously a major problem when we've had the problems of the last few years. Prior to the last government coming to power, GDP was closer to 35%. So effectively, we've seen a 50% increase in GDP, which is very difficult to keep funding when the economy isn't growing. Obviously, then we've had the financial problems as well, which exacerbated the situation in the UK. And since then, we've obviously had the problems in the Eurozone, which has again sort of hurt business confidence here in the UK, meaning that, again, the expectations of the UK economy growing and being able to sort of reduce the budget deficit just haven't come to fruition. So it's not a great position to be in, and it's difficult to see how it will improve in the short to medium term.
Do you see the country's debt stabilising anytime soon?
I don't, because I think business confidence is a key part of this equation, and until the Eurozone really sorts out its problems, it's always going to be, the business confidence has seeped away over the last 12 months, 18 months, because of the problems in the Eurozone, principally in the southern states. And that has caused worldwide economies to suffer, from the UK through to the US through to the Far East. So it's very difficult to see the UK being able to stabilise its debt anytime soon. But the real key is, I think, it's because of its AAA rating, it's managed to keep its interest rate costs down, which means it's got a major advantage over places like Spain, where obviously interest rates on their debt are plus or minus 6%, ours are plus or minus 2.5%, which is a significant advantage. So I don't see us able to stabilise anytime soon. I just think hopefully we'll be in control in the debt situation better than some.
Looking at currencies, due to the focus being on the weakness in the UK economy, do you feel sterling has lost its safe haven status?
I'm not quite sure if it's had a pure safe haven status like the US dollar or the Swiss franc or the Japanese yen. I think it's sort of sat in that middle ground where clearly it isn't suffering from the huge problems that parts of the Eurozone are suffering from, and it's I think it's almost a diversification currency in the sense that it sits in that middle ground, not a pure safe haven asset, but not at the same time not a high risk asset. So I think it's still maintains that status. I don't think it'll ever be a currency that investors flood to, because it just the current environment doesn't allow it to be. But I think people will invest in it as a better alternative than some currencies, and as a benefit for diversifying your asset base.
The UK manufacturing sector grew strongly last year, helping to power a recovery of the economy. What do you see for UK manufacturing for the rest of 2012 and into 2013?
Well, I think it's interesting that the CBI have come out this morning saying that they see saying that the UK is out of recession. Again, I think it's as long as we can get business confidence back into the business arena, I think we'll see UK manufacturing move forward. I think there's some great work being done in the UK manufacturing sector at the moment, and it's against a slightly depressing backdrop. But I think we will move forward. But it could be helped very significantly. Again, going back 12 months to the middle of last year, we were seeing the world's economies moving forward, including the UK's. With the problems in the Eurozone, we saw sort of prevarication, avoiding the problems, the politicians trying to make, not little of them, but, trying to avoid giving a solution. And that was, a major cause in business confidence disappearing. We've now seen in the last couple of weeks the ECB step into the breach and, hopefully underwrite the bond issuance, so shorter bond issuances from the states within the Eurozone. And again, I think what we'll see from that is increasing business confidence. And again, I think that will be very beneficial for UK manufacturing for the rest of 2012 and 2013. But it is that business confidence which is so key for the UK economy and the worldwide economy.
Finally, Britain's expectations for inflation over the next 12 months fell slightly to 2.7% in September from 2.8% in August. Do you feel this expectation will come to fruition?
I think so. I mean, again, I think what affects obviously the UK is it's a huge importing nation, and obviously with a weaker currency, as we saw, nearly fell to parity against the euro, 2 or 3 years ago. And obviously that affects the cost of imports, and that is a major factor on inflation. If energy, which we import a huge amount of energy, increases significantly, that obviously feeds through to inflation. If food imports are becoming more expensive because of a weak, from sterling being weak, and again that affects inflation. But certainly we seem to be in a more stable environment when we look at exchange rates at the moment. Still not perfect, but again, if you look at the ranges that sterling has moved in the last 6, 12, 18 months against things like the US dollar and the Australian dollar, and currencies such as that, obviously against the euro has been appreciating, but against those other currencies it's been a fairly stable range, still quite large, but much better than it was in the previous years. So I think that has a major impact on imported inflation, and hopefully I think that will mean that we will see it at its current levels for quite a while, which again I think will be very helpful for the UK economy.
Thank you, Mr. Purdy, for sharing your insights with our viewers today. Don't forget, if you want to have your say on any of our topics, you can join in on one of our live daily webinars. Just go to the Dukes Copy website. Take care.